Germany was once the undisputed economic powerhouse of Europe, efficient, industrial, and rock solid. But today, something's changed. The UK, despite Brexit, political churn, and growing inflation, is pulling ahead. Why is that? Why is the UK economy outperforming Germany's? In 2024, the UK economy grew by 1.1%, while Germany's actually shrank. The IMF and OECD both now forecast that the UK will grow faster than Germany, not just this year, but well into the future. And according to the Centre for Economics and Business Research, the UK is set to outperform all of Europe over the next 15 years. Germany slipping down the global rankings. So what's really behind the UK's surprising edge? Is it about short-term spikes, or is a long-term power shift underway? Let's unpack the numbers and the future that could redefine the economic map of Europe. When comparing the United Kingdom and Germany, two of Europe's most prominent economies, the differences in economic performance have become increasingly stark in recent years. Both nations have historically held powerful positions within Europe, with Germany long recognized as the continent's industrial powerhouse and the UK as a financial and services juggernaut. But recent macroeconomic indicators reveal diverging trajectories that reflect deep-rooted structural contrasts and the impact of recent political and economic decisions. Starting with GDP, the UK's economy, as of Q4 2024, has climbed 3.4% above its pre-pandemic level. That's a decent rebound, but not as impressive when you compare it to the broader Eurozone, which is up 4.9%. And Germany, surprisingly, it's still 0.1% below its pre-COVID levels. That's a bit of a red flag for the EU's largest economy. Now, when we zoom out and look globally, the US has blown past both with a jaw-dropping 12.2% GDP growth since the pandemic. That sets the bar high, especially with growing global protectionism and the ripple effects of the new US tariffs. Fast forward to 2025, what's next? Well, according to the IMF, things don't look too rosy. They have cut the UK's 2025 GDP growth forecast from 1.6% to 1.1%, pointing fingers at rising tariffs and domestic issues. The OECD isn't much more optimistic, expecting only 1.4% growth in the UK. Germany doesn't fare any better. In fact, it's even worse. The IFO Institute predicts Germany will grow by just 0.2% in 2024 and a mere 0.8% in 2025. So what's going on in Germany? It's still Europe's largest economy with a GDP of $4.71 trillion in 2024. It's a powerhouse in manufacturing and exports, especially in vehicles and chemicals. Yet the engine is spluttering, demand is down, global competition is heating up, and political uncertainty is piling on more pressure. Meanwhile, the UK economy, worth about $3.56 trillion, isn't coasting either, but it seems to be faring slightly better. Unemployment, surprisingly low in both countries. Despite economic turbulence, both labour markets remain tight. Employers continue to struggle with hiring, especially for skilled roles. So at least here, the glass is half full. Inflation tells another story. In March 2025, Germany saw inflation cool to 2.2%, right near the sweet spot of the European Central Bank. The UK, however, is feeling the heat again, with inflation rising to 2.8% in February. That's bound to pressure households, especially in a country already battling a steep cost of living. Speaking of costs, if you think Munich is expensive, try London. The UK capital continues to top the charts in Europe when it comes to cost of living, and the rest of UK's big cities aren't far behind. German cities, while not cheap, are still more affordable by comparison. So as we line up these two heavyweights, it's clear both are navigating stormy seas. The UK may be edging ahead in short-term growth, but long-term structural issues remain. Germany still holds the industrial crown of Europe, but it's weighed down by stagnation, high labour costs, and growing investor unease. Now that we have sized up the economic landscape of these two giants, it's time to dig deeper. What's driving their performance? Let's break down the structural strengths and challenges that define the UK and German economies. If you're wondering why Germany, once the industrial powerhouse of Europe, is now lagging behind the UK in economic growth, it's time we look under the hood and see what's really going on. Yes, the UK economy grew by 1.1% over the past year, while Germany actually shrank by 0.1%. But don't be too quick to declare a winner. Both nations are wrestling with serious growing pains. Let's start with Germany. For decades, its economy thrived on cheap Russian gas and a booming export sector, particularly in engineered goods like luxury cars and industrial machinery. But that engine hit a wall in 2022 when Russia cut off natural gas supplies. With energy costs soaring, Germany's heavy industries took a direct hit. Just to give you a sense of scale, industrial electricity now costs German companies about 20.3 euro cents per kilowatt hour, more than double what their competitors pay in China or the US. That's not just inconvenience, it's crippling for sectors like steel, chemicals, and glass. Renewable energy hasn't scaled up fast enough to plug the gap. Bureaucratic red tape and resistance to wind turbines have slowed progress, and infrastructure like hydrogen transport pipelines is still mostly theoretical. And then there's China. Once Germany's biggest buyer, now its fiercest competitor. Back in the early 2010s, China was a goldmine for German automakers and equipment manufacturers. But fast forward to today, and Chinese companies are now dominating the same sectors. EVs, solar panels, and machinery, all heavily subsidized by the Chinese state. Germany's net vehicle exports have been slashed in half since 2020, while China is now pumping out 5 million exported vehicles a year. It's a brutal reversal. Germany also made a classic mistake. It got comfortable. Years of budget surpluses came at the cost of underinvestment in infrastructure. Trains are chronically delayed, high-speed internet is still spotty in rural areas, and let's not forget the people problem. Nearly half of German companies say they can't find skilled workers. Fewer students are entering STEM fields, and a rapidly aging population is making things worse. Even when companies want to hire from abroad, bureaucratic hurdles make it a nightmare. It's a talent bottleneck that's choking economic momentum. Meanwhile, in the UK, things aren't exactly looking rosy either, but the engine's humming a little louder. The UK's growth is being fueled in part by a hefty £32 billion fiscal stimulus announced in the latest budget. That's giving a short-term jolt to public sector spending and household consumption. Business investment, though still cautious, is expected to recover through 2025. Add a weaker pound into the mix and the UK exports are starting to look a little bit more competitive globally. But this boost comes at a cost: inflation. UK inflation sits at 2.6% in March 2025, compared to Germany's 2.1%. Wages are rising, good news for workers, but businesses are passing those higher labour costs on to consumers. A 6.7% increase in the national living wage and a 16.3% bump in the minimum wage for young adults are pushing up operating costs. That means inflation is likely to stay stubbornly high through 2025, especially with energy prices and trade uncertainty thrown into the mix. Speaking of trade uncertainty, US tariffs are threatening to clip the UK's wings. About 16% of UK exports head to the US, and with Trump's proposed 10% tariff wall, British goods, especially cars and pharmaceuticals, are in the firing line. So where does all this leave us? Germany is grappling with structural challenges that can't be fixed overnight. Energy dependency, underinvestment, a shrinking workforce, and stiff competition from China. The UK, on the other hand, is showing signs of life, but that momentum is fragile. Inflation, trade tensions, and limited fiscal flexibility are dark clouds on the horizon. Bottom line is that both economies are in transition. Germany is trying to reinvent itself after a major energy shock and a changing global trade landscape. The UK is pushing growth through stimulus, but may be setting itself up for tough fiscal reckoning down the road. The next piece of the puzzle is how governments respond to shocks, and how external pressures like tariffs and political tides shape the path forward. Let's examine the defensive plays and power moves reshaping both countries. Let's start with Germany. For the second year in a row, the engine of Europe stalled. German GDP dropped by 0.2% in 2024, following a 0.3% contraction in 2023. What's driving this? Look squarely at Washington. On April 2nd, President Trump dropped a policy bombshell. 10% tariffs on all UK exports, 20% on EU exports. This was part of his newly announced global trade regime. And Germany, with its export-heavy economy and deep reliance on US trade, got hit hard. Car manufacturing and pharma, two pillars of German industry, are now under pressure. But Germany isn't alone in the line of fire. Across the Channel, the UK was just beginning to climb out of a prolonged period of stagnation. Real GDP ticked up 1.1% in 2024, but inflation remained stubbornly high at 2.5%, and even higher, 2.8% by February 2025. Then came the tariff shock. According to EY, UK GDP is now expected to grow by just 0.8% in 2025, down from a previous projection of 1%. And it gets worse. The 2026 forecast was slashed from 1.6% to just 0.9%. Businesses are tightening investment, households are holding back on spending, and the cautious optimism seen earlier this year has all but evaporated. In response to the rising threat from Russia and uncertainty about America's commitment to Europe under Trump, Germany isn't sitting idle. In March 2025, the Bundestag and Bundesrat approved a massive €500 billion spending plan focused on military strength and civilian infrastructure. And the UK? It's stepping up too. Back in October, it signed the Trinity House Agreement with Germany to bolster joint defence. With policies in motion and trade tensions rising, both economies are bracing for what's next. But which country is better positioned to lead Europe's economic charge? Let's turn to the forecasts and long-term projections to see who's set to dominate the road ahead. Who's going to lead Europe's economic race? That's the billion-euro question everyone's asking. On one side, we have got the UK, fresh off a change in government and banking on bold reforms. On the other, Germany, Europe's traditional industrial powerhouse, trying to shake off 2 straight years of economic decline. Let's unpack the outlook. Starting with the UK, it's been a tough ride, no doubt. Economic growth has stalled since Labour came into power in July 2024, but fast forward to 2025 and there's a flicker of optimism. According to the OECD, Britain is now expected to grow by 1.2%, putting it ahead of Germany, Japan and Italy for the year. However, it's not all smooth sailing. Inflation remains stubborn, with the UK set to have the highest inflation among G7 nations through 2025. And the US has just slapped tariffs on British exports, hitting cars, steel and aluminium the hardest. GDP growth is now projected to slow to just 0.8% in both 2025 and 2026. So the UK might be outpacing some peers, but it's doing so while dodging economic potholes. Germany, meanwhile, is grappling with deeper structural challenges. The economy shrank 0.1% in 2024, marking the second consecutive year of contraction. Manufacturing demand is down, investment is weak, and consumer sentiment has taken a hit. Construction is struggling, and even with a rebound expected in 2025, growth is only forecast to hit 0.7%, less than the UK's 1.2%. Labour market data also tells a story, as job vacancies dropped by nearly a quarter. Real wages are rising, but so are fiscal pressures. The German government deficit is improving from 2.6% of GDP in 2023 to 2% in 2025. But increasing spending on defence and social programmes could keep public finances tight. Looking ahead, the long-term outlook from the Centre for Economics and Business Research, CEBR, is revealing. By 2039, the UK is projected to remain the world's 6th largest economy, ahead of France and narrowing the gap with Germany. Germany's economy will still be larger, but only by 20%, down from the current 31% lead. Britain is also expected to be 25% bigger than France in output terms. The International Monetary Fund and OECD back this narrative with cautious optimism. They see global trade rebounding, inflation easing, and interest rate cuts supporting growth. But both warn high public debt and geopolitical tensions remain serious risks. So who's winning the economic race? Right now, it's neck and neck, but if the projections hold, the UK might just sprint ahead over the next 15 years, even if it's not running at full speed today.